dolazi nam gospođa Susanne Hofer, European Affairs, Austrian Insurance Association. Please.
Thank you very much for having me today and this very nice intro. I'm not really used to having such a center stage, and especially in such a nice setting as here in Opatija. I know that we're competing against an Adriatic seaside with sunny weather outside, so thanks a lot for your stamina and bearing with us as we will be talking about an issue that will keep the insurance industry busy and for probably not only the next year, but the next years. So within the next 20 minutes, I will be walking you briefly through the so-called retail investment strategy. What is on the agenda? First, let's take a brief look at 5 years of IDD on the ground. Then let's face what the retail insurance strategy is all about. I will be reporting about the latest rumors we've heard, especially last week from the Finance Commissioner. Then I'll be shedding a light on why the EBIP products are important for the Capital Markets Union. I will be sharing a graph on the distribution landscape across the European markets. I would like to back up certain hypotheses with a recent study by a German consulting firm, and then would also like to bring your attention to our sector's key messages so far in the making or towards the publication of the retail investment strategy. I will be also shedding a light on the regional perspective of our markets within the CEE region. We'll further go on in financial literacy and reporting why this is really important, and then finally giving an outlook on 5 ways to ensure that the retail investment strategy works for all, and also giving an outlook of how the way forward could look like and what is yet to come. But let's kick off in taking a look at 5 years of IDD on the ground. First of all, the IDD provides a robust distribution framework for the insurance sector. It is working well. It has definitely strengthened and professionalized the insurance distribution. It also respects that insurance and investment are actually 2 different worlds, so to speak, and also is appropriate for the diverse national market specificities. It was deliberately designed as a minimum harmonization directive, allowing national lawmakers to adapt to the right approach for their national markets according to their respective needs. And some member states have actually made use of these options to further introduce restrictions where appropriate and applicable for their respective markets. As for the market I come from Austria, the IDD implementation is actually in its daily insurance business being supervised by our local competent authorities during on-site visits, and we have experienced, judging from feedback from our members, that currently there is a strong focus on documentation, especially on the POG, another buzzword within the IDD. So where are we heading to? Quo vadis? Where does the insurance distribution regulation will go to? And are we actually standing at the crossroads? I would say yes, we are, because the sectoral legislation that the IDD is meant to be will no longer prevail and will not continue according to the plans of the Commission, because we will be entering, let's say, a new era of horizontal legislation, especially in the area of the EBIP products. The EBIPs are the insurance-based investment products. So where are we heading to? I would like to use the words of the Finance Commissioner. who recently said in a public appearance that there's a need for a thriving capital market in the EU in order to secure our competitiveness on the long haul. We know that in the European Union, there is the need that we need to recognize that without the retail investors, so let's say basically you and me, the average citizen, there won't be a successful capital markets union. And she's further of the opinion that the current status of the legislation does not serve the consumers best, because sometimes consumers do not realize how much they actually spend on a financial product, or they have difficulties in comparing the products that are available at the market, and there she sees the need to address conflicts of interest around the investment advice. As you can probably guess, the views on that and how to tackle it diverge really very strongly and on how to address it. The problem will surely not be solved overnight, so there has been really quite some discussions already going on, and this will continue in the years to follow. And another thing that is noteworthy, she also said that, well, certain business models and business practices will need to be rethought in the future in order for consumers to get a fairer deal. So how is the Commission going to tackle that? Yesterday we have learned from our dear colleague William Vidonia from Insurance Europe that this retail investment strategy that is due to be published by the end of the month is truly a game changer. It will be a new concept. And so over the last 2 years in particular, there has been a lot of research, public consultations going on, papers have been drafted, discussions and debates were done. And as I said, at the end of the month, the Commission will probably come up with a legislative proposal in order to set up a single and harmonized framework for all the EBIT products, regardless of whom they are distributed by, so whether it be from banks, from insurers, from fund managers, you name it, and in order to grant a common level of protection for the retail investors, and at the same time to boost their participation in the EU capital markets. The format they are going to or are most likely to propose will be the one of a so-called omnibus proposal, because this is a legal means to make changes simultaneously both in the IDD and the MiFID II regulations. It will most likely be based on 4 thematic pillars that I will be talking about in a minute. And all of that should serve certain objectives. And I think the most prominent would be the ones dedicated to biased-free advice, so neutral information, neutral advice, fair treatment for customers, a competitive and cost-efficient financial services and products. There will be the new buzzword, value for money. And surely more digestible information as far as disclosures are concerned. Allow me to now use a metaphor in order to point out the 4 pillars. By making use of the temple here, it will probably be our new place to worship for the years to come. As far as the first column is concerned, the inducements, there will surely be a tightening of conditions under which inducements are allowed. That could be anything from the prohibition of certain types of inducements or even a deferred application, so a staged approach in implementation, or even a combination of the measures, whether it be a partial ban and or a cap on commission. For the second pillar, the so-called value for money, the Commission is currently exploring possible ways to improve the cost efficiency of retail products. And that would include, for instance, more formal testing of the cost effectiveness within the design phase of the product, and could even be taken further to the distribution phase with more elaborate explanations provided to the customer on how this selected product can provide better value for money compared to others. There is quite some inspirational material available from EIOPA, from the European Supervisory Authority for Insurance and Pensions, namely a supervisory statement and also a toolbox. So there's a lot to read for the Commission on that part. As for the third pillar, the so-called personal investment plan, this shall be a new approach to the suitability test, would come on top of it. And here, the Commission plans to identify the appropriate exposure to different types of investment products for the individual customer. And lastly, in the fourth column, as far as disclosures are concerned, yesterday we've learned for the provision of an EBIP, there are, I think, 339 pieces that need to be handed over. So the EC will come up with proposals of improving the consumer-faced disclosures as far as the amendments for the PRIPS level 1 and level 2 are concerned. So that was very, very briefly the content. Now I will be moving on to the timeline. The proposal has been postponed several times, so that already shows that it's really controversial already in the making. The new D-date was set for the 24th of May, so a bit fewer than 3 weeks, and we will have that available. However, and I think this is really decisive, the timing factor in the remaining working time is very little, because the Commission comes to an end in May 2024. So there's roughly a year, and if you deduct the summer break, the Christmas, the public holidays, etc., so it's really sized down to a couple of months. So what are the latest rumors? There was a public appearance by Commissioner McGuinness last week in Stockholm at the Eurofy seminar, where she announced that there will not be a full ban on commission as part of the retail investment strategy. And I really could feel a tangible wave of relief that went through the sector. However, I do believe this is just one side to the coin, because the Commission is currently considering stricter rules, whether it be on the allowance and the payment of inducements. There could be a possible alignment with the MiFID rules, partially, or going even beyond that. As I said, value for money will be the new buzzword. There is inspirational material available from EIOPA. Then she was mentioning access to reasonably priced advice. Remains to be seen what reasonably is going to look like. There will be increased scrutiny and very important, the so-called review clause, and I consider that pretty much the backdoor, because with that review clause, it would allow the Commission to come up with a full ban on commission at a later stage if they deem necessary. She further went on to say that she will continue the debates with the stakeholders. There will be roundtables organized in the weeks to come, and there she will be challenging the industry on to show her what is being done on the ground to solve the problems the Commission has identified, and the timelines to address them. Further, along with the rumors, we expect the retail investment strategy to also include measures on digital marketing through social platforms, financial education, also the inclusion of ESG information in the PRIPS kit. There was, of course, quite controversial media coverage from this speech of Commissioner McGuinness. We know and we have experienced that the consumer organizations are currently strongly pushing for bold interventions by policymakers, claiming that consumers are now receiving biased advice, and mis-selling could derive from that if the Commission is not going to present stricter rules. What we can also report is that the financial services are united in opposing an EU-wide ban. I would regard this as a first partial success, but as I said, the road is not over yet, and the journey will be a long and tough one. What we also face, and this has been mentioned also yesterday by my colleague from Insurance Europe, there is a lack, unfortunately, a lack of awareness and understanding on insurance, on the expertise on insurance business. We face political challenges, whether it be the access to the policymakers who actually write the legal text, and also from political polarization. And as I mentioned, the time will be a decisive factor as well. Here I brought you some facts and figures on the EBIPS market. So why are those products important? Well, it is about quite some huge volume, so big business. 4.1 trillion, that's a figure with 12 digits. Is the volume we're talking about according to estimates from Insurance Europe. The EBIPs are in general part of the PRIPS group. They are life insurance contracts that offer either a maturity or a surrender value, wholly or partially exposed directly and indirectly to market fluctuations. They do provide return over time and can offer benefits such as the death cover and other types of coverages. And they are an instrument, a capital instrument, capable of creating capital for those individuals who not necessarily have enough wealth to be able to access any sophisticated asset management opportunities. So it already shows that it's really important for us as an industry to be there at the table once the PRIPS discussions are kicking off, in order to make sure that the rules are really fit for insurance purposes, and also the disclosures are meaningful to our customers. In this geographic graph, I would like to let the colors speak for themselves as far as the distribution landscape in Europe is concerned. You see there is a lot of green, not stemming from sustainability, but from the countries who have a payment by commission, and you can really see that's the predominant way of doing business. And we generally believe that, or we have the feeling that now the focus on the discussion of the debate is increasingly on costs, with consumer organizations saying that the costs are too high, and the intention of the Commission has in principle been to address issues related to the conflict of interests. This also means that the costs are actually coming to the center stage, and for the wrong reasons. And I would like to back this feeling up with a recent independent study by a German actuarial consulting firm. My own organization, the Austrian Insurance Association, has in the past ordered certain PEP calculations, and this is how we got in contact with them. And not only did they found out in their recent study on distribution that the famous Cantor study, the Commission has put out on, or has been doing, partially has led to misleading arguments, because those arguments that go beyond a pure cost perspective have actually been ignored. And another thing they found out is that the commission system has, of course, also desirable macroeconomic effects, because the larger contracts are, in relation, charged more than small volume contracts, and thus actually subsidize the advice provided to those clients who are less affluent. So to cut a long study short, they have been conducting quantitative analysis using typical examples of different compensation models. And the bottom line, and I won't be bothering you any further, is that this study really claims for the coexistence of both systems, the commission one and the fee. So this is really to keep up the choice for the consumer to choose whatever is most suitable to them as far as getting advice is concerned. Papers have been drafted, letters have been sent, bilateral and multilateral talks have been held, and here I just brought you a very brief extract of the key messages our sector so far has been communicating to the policymakers. Of course, it goes without saying we do not want a MiFIDization of our sector with the rules stemming from MiFID. We would like to have the minimum harmonization approach that IDD provides also for the long term. And I think the most important message here is that we really believe that the value for money principles would need to be not only flexible, should also have a holistic approach, especially in combining both quantitative and qualitative aspects of the EB products. As far as our regional perspective is concerned, of course, the markets diverge from one another, but there are certain things we do have in common, which is, of course, that there is not only one EU distribution system. The commission-based distribution model is the one most common within the CE countries. This also leads to the affordability of advice, which I think is really a very important factor. And our markets who are rather, let's say, traditional ones are still characterized by face-to-face advised sales. So really where you sit down with your advisor and your intermediary and you talk through. So if consumers are not either willing or not able to pay for advice upfront, they probably cannot access certain areas of products any longer. And this would hence also block a major path in reducing investment, pension, and also the protection gap. So together with the colleagues from Insurance Europe, the associations and companies across the markets have come up with a set of recommendations of how the industry thinks the retail investment strategy could work out for consumers. So that starts off with streamlining the disclosures, making them more engaging, making them actually digestible, then focusing the disclosures on what really matters to point out where insurance cover is granted or not. Then also to embrace consumers' digital demands and appetites on both ends, the ones who are more digitally literate and the ones who are not so. Then to increase a certain risk awareness and also to boost financial literacy, and I'll be talking in a minute about why this is important. And last but not least, of course, to ensure easy access to advice and protection for all. We believe that financial literacy is it's not only an open secret, that it's rather very low within the EU, and this has also been shown by research. But the problem is that the risk awareness and also the financial literacy are a key factor to consumer empowerment and their participation in the financial markets, and particularly among those who actually need them the most. And we believe it is a core life skill that should be developed and nurtured as early as possible. And to put it in the Commission's words, the earlier in life that we build up financial awareness, the better. And also financial literacy is a key part to the puzzle. So we can only probably get it right once this element is also boosted. Now you probably ask, well, education is rather a matter of national governments. That is very true. The Commission has picked up on it in the Capital Markets Union action plan. And I personally believe that financial literacy can only be boosted by means of public-private partnerships, where really everyone does his and her part. And especially as far as the private component is concerned, I think also we as parents have a really obligation to financially educate our children as early as possible. And I will do my part. I will promise that here officially. And the reason you see here, because this little Miss Sunshine obviously showed interest recently in not only toy grocery shopping and also selling, but particularly also in the payment at the cash desk. So as cautious parents, we instantly decided that for her upcoming 3rd birthday, she will get a wooden cash desk in order to further train her skills, also playing at home in private, getting to know the way to handle coins, bills, and also credit cards. So you can quote me on this promise in a couple years from now, and I hopefully can report of at least a private success in that concern. So that brings me towards the end of my presentation, where I just once again would like to wrap up what the insurance industry would like the retail investment strategy to be. Of course, to have a holistic approach, because in order to facilitate investment and increase protection at the same time, it will only be able to, by means of combining additional measures, of which would be the first one, improving the disclosures, as I said, make them more engaging. Then the buzzword, value for money, have them as flexible as possible within the product design phase, and have them not fixed as far as the quantitative benchmarks are concerned. And last but not least, we really hope to remain the freedom of choice and hence promote the coexistence of commission and fees. And now you've almost made it through. Just a very quick outlook. What is yet to come? 24th of May will be, as I said, the D-Day for a possible legislative proposal, including this including the review clause on a full ban on commission. The legislative process could go until the end of this commission mandate or even beyond. Then there will be surely the implementation phase, remains to be determined. It's usually 2 years, stemming from the last experience of the implementation of the IDD. And then, of course, before talking about the end, the IDD review has actually been postponed until the next commission mandate. So we expect there to be certain spillovers from ideas stemming from the retail investment strategy also into the non-life sector, because this will be the remaining part of what the IDD review will be all about. So we'll continue to engage. There will surely be tough negotiations ahead in the legislative process. It will be challenging in terms of timing and content, but we all will race to this challenge, and let's keep the faith. Thank you.